the Biden administration releasing the list of the first 10 prescription drugs it will target for Medicare price negotiations. It's the first time Medicare will be able to directly negotiate prices with pharma companies as part of the Inflation Reduction Act and intended to lower costly drug prices for 66 million older Americans enrolled in the program. But it doesn't come without criticism, and according to former FDA Commissioner Dr. Scott Gottlieb, a lot of unintended consequences. He's here with that angle. For the trades and the impact on the pharma space, we're joined by BMO's Evan Seigerman, and CNBC's Sharon Epperson has a closer look at how this could impact the cost of caregiving. Dr. Gottlieb, starting with you, we're sort of saying negotiation, but it's kind of like that scene in Friday about whose bike it is. I don't know how much of a negotiation this really is, right? I mean, prices are coming down, and that's going to make people want to make other drugs.
Yeah, look, it's not really a negotiation. They had to create the guise of negotiation to make this legally sustainable, and it's being challenged in court right now. I suspect that the prices that Medicare is going to administer here are going to be on par with probably what they extract in terms of discounts in the Veterans Administration. So it's going to be on par with VA pricing. They're due to send the manufacturers the first tranche of the sort of proposed prices. I suspect there'll be very little give and take on that, and then they'll arrive at the final price and announce those. There's going to be unintended consequences here. There's a lot of cliffs that are created by this law. There's a big delta between how much exclusivity is afforded small molecule drugs, only 9 years, versus biologics, 13 years under the law. So this is really a synthetic loss of exclusivity on these drugs once they come into these price regulations. So that gap between the returns on small molecule drugs and biologics are driving a lot of manufacturers right now to look at developing biologics against certain targets, and also rethinking going into indications that are predominantly Medicare indications. I suspect you won't see a lot of new business development looking at small molecule solutions for Alzheimer's, for example. You won't want to take a small molecule drug into a predominantly Medicare population. And that's unfortunate because certain biological targets can only be reached with small molecule drugs.
Well, some countries seem to already get these drugs for less than we pay for them here in the U.S. So why do we get the unintended consequences?
Look, the Medicare Part D program itself is quite competitive. If you look at the price concessions afforded to the government in the Part D program through the competitive bidding between different plans, a lot of times the discounts that are extracted are greater than the discounts that are extracted by European price-setting authorities. We created the Medicare Part D program, and I was there when we did it back in the early 2000s, to create a competitively bid structure on the assumption that you would extract savings, but you would also make sure that the capital got allocated to hopefully the best public health endeavors. And so that if companies were chasing returns on capital, on the whole, the places with the best returns on capital would also be the places where you'd have the biggest public health impact. And I think by and large that has worked, and that was the reason to create a competitively bid scheme. Now we're coming in with price controls. So we're upending that scheme, and we're saying the government can pick and choose winners more effectively. And I think that's going to cause a lot of misallocation in capital.
How long before we see that?
We're seeing it right now. You saw statements from the CEO of Novartis and Lilly that they've shelved certain programs, and certainly in the venture capital market, and I work for a venture capital firm, I see business plans. You're not seeing business plans come through, for example, for small molecule solutions for Alzheimer's. I haven't seen a business plan like that in years, really, at this point. I think you're going to see people pull back from markets where it's a predominantly Medicare market, trying to be solved with a solution that's going to be subject to earlier price regulation. And unfortunately, there's certain things like intracellular targets and targets on protein pockets that you really can only attack with a small molecule drug. Final point here is that if more of the investment does shift towards the large molecules, which is what's happening, those are harder to genericize and more expensive to administer. So ultimately, you're moving into drugs that are costlier in the long run and away from drugs that are cheaper, like the small molecule pill-based drugs.
Let me rephrase that last question then. Not how long until you see it, but how long until the electorate feels it and perhaps has more of an opinion about it?
Yeah, look, probably within 5 years. I think it's hard to know what you don't have. So I think in some respects the costs of this are hidden. But you're going to start to see capital come out of these markets, and then you're going to start to see the government step in and say we need to subsidize certain things. As soon as you see that, as soon as you see the government stepping in and say we need to find ways to subsidize new treatments for Alzheimer's, that's an indication that investment capital have left those markets.
All right. Dr. Scott Gottlieb,